Hi, Lee Phillips again. Talking about Subchapter S stock or corporations or LLCs taxed under Subchapter S. The IRS has certain rules that you have to follow in order to have a Subchapter S tax classification. And that could be a corporation legal structure or an LLC legal structure. Either one can be taxed under Subchapter S of the IRS code. Basically, Subchapter S was developed to make it so that mom and pop could have the corporate shield and be protected by their corporation or their limited liability company, their LLC, and still basically be taxed as a partnership. We didn't want to submit them to the taxation, dividends, and all that crap of a Chapter C organization. Chapter C, it's difficult. So we created Subchapter S. And in order to qualify for that, the company, the LLC or the corporation, has to be a domestic company. It can't be a foreign company. The only people who can own Subchapter S stock or LLC membership interests are basically warm-blooded United States citizens. Now, we could have a green card holder, and there's a bunch of rules, but basically you got to be a warm-blooded American. That means that another corporation or another LLC can't own a Subchapter S entity. They can't own an interest in a Subchapter S entity. Now, you can have a qualified Subchapter S trust or a electing small business trust, or there are a number of trust variations that could own Subchapter S interests, and they're okay, but basically they have to have only one beneficiary. Kind of the gig is the IRS wants to know who they can tax for this money that is coming through this LLC or this corporation. So they've set all of these rules in place so that we know who we're going to put the finger on and who we're going to tax for the money that comes through this entity. So you can't have another company own a S interest. You can't have a foreign own an S interest. Oh, and you can only have up to 100 owners. Now, husband and wife can be considered one owner, and there are a bunch of variations on that, but basically no more than 100. And when I started out, this will tell you how long I've been doing it, it was 25. So they've gradually upped it so that we can have up to 100 owners of the LLC or the corporation, which is taxed under Subchapter S of the IRS code. So you've got to follow the rules, and if you don't follow the rules, you get screwed because the IRS comes back in and says, no. This isn't an S corporation. This is a corporation that's taxed under Chapter C of the IRS code, or an LLC that's taxed under Chapter C of the IRS code. And that throws the whole thing in, and they go back and they assess everybody with the taxes, and it really screws things up. So you want to make sure that you are following all of the rules whenever you have an S entity. And if you're mom and pop and you're downtown U.S. and you've been citizens for 69 million years, you were born here and blah, 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 it's no big deal. If you start to use trusts to own the interest, then maybe that is a bigger deal. And mom and dad actually want their living revocable trust to own their Subchapter S interest, because that way it won't have to be probated when mom and dad die. So that's a big deal. And I have another YouTube about trusts owning Subchapter S interests. Don't forget to subscribe, because I put up new information all the time. I try and do at least one a week. And you get to be notified when that happens. And don't forget to follow the links to the other YouTube videos that I have that are relevant to what we're talking about here. This is Lee Phillips talking about Subchapter S entities and ownership.